the way this session is set up is we're going to have 3 entrepreneurs presenting their ideas that they think can help transform the way the energy transition is taking place, that they can accelerate the pace of this transition. And then we have, and I'm not actually going to introduce the companies or the entrepreneurs because I don't want to do them any favors, but I also don't want to do them injustice, which is what I'm more worried about. But also who I am going to introduce is our jury members. So we have Arpit, who's not here at the moment, so when he comes in, I will introduce him again. Anant from Wilgrow, Jesse from the Agora Energy Vendor, and Neeraj Menon from Trilegal. And the job of these jury members is to actually, so the format will be that each entrepreneur is going to get 7 minutes. They can use their 7 minutes as they like. So they definitely have the first 5 minutes to make a presentation. If they would like, they can use slides. I think all of you are using slides. And then you have 2 more minutes which you can use either to continue speaking and making a compelling argument for why this is a good business idea, or you can offer those 2 minutes to members of the jury and to the audience to ask you any clarificatory questions. If you decide to not use those 2 minutes for questions, there will be no opportunity to ask questions or clarifications later until after the session, at which point this is still a democracy, you can talk to each other. So that's how we'll do it. So it'll be one after the other and in alphabetical order then. So we'll start with Minergy, then New Leaf, and then Village Energy. And at the end of those 21 minutes, we will have a moderated open discussion between the jury members of what they thought and what are their little opinion pieces or pieces of advice for the 3 companies. And then in the end, I'm going to make a very quick 1-slide presentation of a way to mobilize capital for these entrepreneurs and beyond just these 3. And then we'll close. And we will stop at 5:45 at the latest, so you can plan your day accordingly. Yeah? Thank you.
Minergy, and today I'm going to talk about eDrive, mobility platform, working title. And I'll explain in a second why that is so. But first, let me introduce what Minergy is about. The goal or the vision for Minergy is really to accelerate the energy transition through technology and finance. And today I'm just going to talk about eDrive, which is on the technology side, but if you want to learn more about the finance work, there are these flyers, which I can share with you or come find me later. But let's get into the fun stuff. So this is about electric mobility, and we are here. We're literally just getting started with the e-mobility transition. There's barely a handful of countries that are far ahead, but really it's very early days, even for the most mature markets. Fleets are going to lead this transition, by which I mean electric cars or electric scooters or electric 3-wheelers, which are owned by large aggregators, whether it's someone like Ola or someone like a taxi operator. That is where the transition will happen first. Why? Because fleets electric vehicles in fleets make a lot of sense. They have the characteristics that are best suited for high utilization, predictable usage patterns, so which means you can align your charging infrastructure, and fleets have very high sensitivity to operational savings. So wherever you have potential savings, electric vehicles are already making sense. Wow, time flies. But there is a small problem, which is that electric vehicles and charging infrastructure, despite being smart, is now getting caught up in silos, by which I mean if you have a charging infrastructure provider reporting to their portal, a car manufacturer reporting to their portal, how do you put it all together and make sense of it and use it in smart decision making? eDrive makes smart fleets smart. Let me just explain quickly what it is. It's a platform to accelerate EV adoption for fleet operators and to make their assets interconnected and smart and digital assets. What it does, it actually empowers a number of applications like business intelligence, value-added services, apps, and enables like a number of business models. Data silos are a real big problem because they lead to manual data collection, they're error-prone, they can be manipulated, they're slow, and they're just not what you want if you're going to be running around hundreds or thousands of cars or scooters or 3-wheelers in your network. eDrive puts fleet data to work. So how does it do that? It basically automatically collects and synthesizes information from diverse sources. So imagine if you had a number of Mahindra cars with, coupled with cars by Tata, by a number of other manufacturers. You want to be able to put them all together and use them in a meaningful way. And you want to represent that information in the form of business intelligence. And on top of that, you want to be able to make apps that actually utilize those high-value assets as much as they can be used so that you can extract the best returns as a fleet owner. So what eDrive does is it basically allows end-to-end electric fleet intelligence. And I'll probably not get into the details of this because I'm watching the clock. So this is where we are right now. We're early stage. So this presentation doesn't include a lot of information about the economics, but I hope that I've emphasized the problem enough. But where we are right now is we're doing a number of pilots across the world right now. We have a fleet operator with about 2,000 Teslas who is now using this platform to understand what can they do with those cars and make them smarter and derive more value from it. BYD, which is a large manufacturer, we're working with the fleet operator in Indonesia with these vehicles. We're actually tracking about 300 little Okinawas in Delhi and Mumbai with this, and we're in discussions with, we'd love to work with some fleet operators with Mahindra and other Indian OEMs. So with that, I will just pause and turn it over to the jury to provide their comments and feedback. But before that, I would just add one quick thing. Comparable businesses are able to charge anywhere from 3 to 5 euros per asset per month for much less than what we're offering. So that's just to give you a sense of the revenue potential of this opportunity. And that's what the team looks like. So with that, I will pause, and I have 2.5 minutes. So comments, feedback, Rick Pats, most welcome.
I think I understand the proposition. I didn't fully get, who's your client, your first client?
It's a fleet operator, somebody with hundreds of vehicles, for example, that they're running as a taxi service. So the client that I mentioned in Indonesia, they have about 30,000 cars. They run it as limousines or as normal airport taxis. So those are the first client.
Bhaskar, what kind of data are you gathering from these cars, and what are your thoughts on the whole data privacy aspects of it?
Yeah, no, that's a very important question, and I think that's where, again, fleets are a good entry point because fleets own their cars.
If you're going to synthesize data from various car manufacturers, right, a fleet can have a mix of Mahindra and BYDs. Let's take that example. It has a mix of Mahindra and BYDs. So you're going to gather data from Mahindra and BYD both and provide it to the fleet operator. Is BYD and Mahindra okay with it?
So they're usually doing it already. It's because most fleet operators or most OEMs will provide data for the user of the car and the owner of the car. And in this case, the fleet operator is the owner of the car. So what we're doing is to make it easier for the owner to access information about their own assets. So in that sense, privacy, it does come in down the road, and I think I completely recognize that it's a very challenging aspect of it. But as far as the ownership is concerned, there is no conflict.
Related to that,
Sure.
I had a question. You mentioned that the OEMs are already providing some kind of data aggregation support, and often we see that these fleets are actually kind of fairly unidimensional. They will typically go with one manufacturer just to get better rates and all that. So then how does your platform add, won't it be almost like a competitor, and why would somebody kind of go with you when they already have some option of aggregating data?
No, that's an excellent question, and I think that was also a worry that we had in mind. We talked to an operator here in India with 800 Mahindras, and they said they can't even track their own Mahindras even though they're with the same OEM, and there are 3 different kinds of softwares and they're not upgrading. Ironically, when we talked to the operator with Teslas, they had the same problem. So it's interesting because very few cars, indeed, are actually made for use in fleets, actually. They're actually made for individuals to buy. And so most OEMs don't pay attention to an aggregator of vehicles. So that's where we feel we come in. But the moment you start talking to someone who's got different vehicle manufacturers on their, in their portfolio, then it's a clear case for us, I think. Well, thank you.
Okay, so next up we have Anurag from New Leaf.
Yeah, thank you. Let me figure this out. Yeah. Sorry. Yeah. Yeah, so let me set up the context. We asked our farmers, we told our farmers that we want more fruits and vegetables. We are now becoming prosperous. We can now pay for them. So our farmers rose up to that occasion, And now we grow more fruits and vegetables as compared to food grains. India is the second largest producer of food grains, fruits and vegetables in the world. Sorry. But what we have really done is that we have a monster on our hands. That is really growling at us. The Planning Commission estimates that we waste approximately 92,000 crores worth of food, and that is mainly perishables. And also the Planning Commission says that inadequate cold chain infrastructure hampers India's food exports. Now, our farmers grow 650 grams of fruits and vegetables per day per person, and this cannot be consumed. So the problem we have is that unlike food grains, horticulture is perishable. We need cold storage. And we need cold storage for 500 million tons of fruits and vegetables. And like the Planning Commission says that currently there is a 99% shortage of cold chain. So really, what do we do? So do we create another monster by generating this power and using conventional grid-powered compressor-based refrigeration systems to drive these refrigeration systems? So what New Leaf has done is that we have a renewable energy powered system for farmers. That is the first leg of the cold chain. And this can be installed on the farmers' fields. It uses all the waste residue, the farm waste residue on the farmers' fields to power up the refrigeration systems and be able to store 15 metric tons to 30 metric tons of perishables, cool them down to 0 degrees centigrade with a very small biomass consumption of about 100 kilograms a day. And not only the system uses renewable energy, but the system also uses a refrigerant, a natural refrigerant that has a 0 global warming potential. And this complete product was developed by us here in India. The patents have been applied for. This is the background of the team. I'm Anurag. My background is that I did my engineering from IIT Kanpur in 1982, long time back. And for about 20 years, I was the managing director of a company providing engineering design services into North America and in Europe. Sahuji is retired out from the Indian Air Force. He used to be servicing fighter jets. And Akash is a young guy. He's more into sales and marketing. So this is an example of one of our installations, a farmer, Bhim Bhai, located in Gujarat. He grows lemon, and at the time of the harvest, the lemons sells for 10 to 12 rupees a kilo in the wholesale market. 3 months later, the lemon sells for 50 to 55 rupees in the wholesale and 70 rupees in the retail market. So this gave the ability to Bhim Bhai to sell his lemon instead of 10 to 12 rupees a kilo to 60 to 80 rupees a kilo in the retail market. So let me just skip. This is an example of an installation in Kapurthala in Hoshiarpur. In Kapurthala and Hoshiarpur, in Hoshiarpur it is being used to store apples, to pre-cool apples, the fresh apples, and by pre-cooling apples, we can increase their shelf life by about 25%. Another example, ripening of mangoes. The farmers can add, instead of selling them for 20 rupees a kilo, he can add another 20 rupees a kilo, ripen the mangoes, and sell them into the market. So here are some price variations of various commodities. These are normal commodities, tomatoes, cauliflower, carrot. And you can see these are our mandi in Delhi. How the prices vary between February and March. So the prices are up by almost 100%. And these commodities are very easy to store. So this is a background about our company. This year we have done about 1.5 crores. 3 times that from last year. And in 1920, we intend to do about 3 crores. And next year, we should be able to arrange for financing for our buyers. And once we are able to do that, then we are really ready to ramp up. Thank you. Yeah. Any questions?
Sorry, can I take that first? I didn't hear you mention anything about the fuel source. How are you going to assure supply to your generating plant? That's question number 1. Question number 2 is this a behind-the-meter sort of an arrangement with the farmer, or have you looped in the local grid into this?
Yeah, so let me answer. So the farmer grows fruits, vegetables, food grains. On his farm, he already has sufficient farm residue. So wherever our systems are installed, he has a barn next door where all this is stored. Yes, and that's the fuel. So we're not transporting anything from anywhere, and the farmer doesn't have to transport or sell it. Yeah. No, it is not a, I don't know what you mean behind the meter connection.
What I mean is, do you have an open access to generate and supply power to a consumer, or are you doing it behind the meter?
No, so we are not generating power. So this system uses heat to generate cold. So we are not generating electricity in this system, no.
There was a question in the back there, yeah. Go ahead.
What kind of challenge do you see in the diffusion of this kind of cold chain, and what kind of market support or driver mechanism should be there in the policy or regulatory side so that this product diffuses into the market?
Yeah, so as far as the farmers are concerned, there is a huge demand everywhere that we go to. But again, the farmers need finances to buy it, and the banks come in the middle. So we are working with banks to be able to finance these.
That's time and then some. Thank you, Anurag. Okay, and then our third and final presentation of the afternoon from Village Energy, Wayne.
Hi everybody, my name is Wayne Lubinskas. I'm a co-founder of Village Energy. We come from Western Australia and we come from a utility that is probably one of the largest and most technologically advanced utilities of rural networks in the world, with especially high penetration of distributed renewables. When we first came to India, we started to research whether there was a challenge we thought was worth exploring. We sort of heard different things. When we went and spoke to the distributors, they were very clear. They had 24/7 power. Even when sometimes we were in meetings when the power was off in the actual meeting. But then you went and you spent time with the consumers out in particularly sort of peri-urban and rural areas, and the experience was significantly short of 24/7. So we looked at the situation. It's a pretty wicked problem for the distributors. They've got lack of capital, they've got significant growth in their consumption base, they've got operating losses that are continuing to grow, and they're underserving their consumers, and they can't really tell anyone that they're actually not serving them properly. So we think there's a really big opportunity for something that's quite unique. We've developed a technology platform that it's not infrastructure centric, it's technology centric. So we use advanced technology to try and solve these challenges, infrastructure light, subscription based, using advanced technology to improve the economics of the DISCOM and the reliability of the network. We're live in Andhra Pradesh. We're in a village in the Kurnool district in Andhra Pradesh to 130 consumers. Basically, the way our solution works is we take the grid and we work at a transformer level below the transformer, and we turn it into a virtual microgrid. And the way we do that is we put a smart device connected to both the supply and the demand, So each household has a device. It's a smart meter, but it does a lot more than a smart meter. We also put it on the transformer, any distributed renewables, any form of generation. And we don't just take the information, we use artificial intelligence to control the grid in real time. So we turn it into its own little ecosystem, and we optimise the economics and the performance of the grid. There's three main parts to the solution. There's a mobile application that consumers use to prioritise their power and how they want to use it and their spend. There's a smart device that goes into each connection. And then there's the platform where most of the smarts actually lives. Think about it a little bit like Uber operates on the roads. They're not owning the roads, they're not owning the cars, they're not employing the drivers, but they're providing a technology that actually connects and makes the system work much better. This is not just an Indian challenge. If you look right across Asia, in fact right across the world, there's similar challenges in terms of profitability, serving of consumers and lack of capital, and the problem's growing. Our customer is the Discom. What we look to do is improve their economics, and in return we get a platform fee. There's smart meters out there. We compete with smart meters in some respect, but really the smarts is in the platform that's actually managing the grid without engineering, infrastructure and human effort. There's two main points to that value proposition. We incentivise increased amounts of distributed renewables. We're not a solar provider, but we bring more renewables into the grid, and we're managing the grid in real time. We're allowing supply and demand balance to occur. We're not sending the information centrally for people to look at. We're controlling it. Our business model is a platform fee, which is paid directly through a consumer prepayment model, and then we use smart contracts, which are part of a blockchain, to actually distribute the different commercial transactions in real time. It creates a model which is a high recurring revenue stream. It allows high amounts of scalability across a Discom's network, and it's got a relatively high gross margin. We've got a pretty strong pipeline here in India, and we've also have some pretty strong opportunities in Indonesia, Philippines, and other parts of Pacific. We took a seed round of funding from an organisation called Breakthrough Energy Ventures. You probably haven't heard of them. I hadn't heard of them, but they're founded by Bill Gates. On their board, they have people like Jack Ma, Richard Branson, Jeff Bezos, who have all gotten together to invest in technologies that are going to change, have the biggest impact on carbon emissions. And we're looking to raise $7.5 million US. And we're talking at the moment to investors. Thank you.
How easy is it to retrofit this degree of very sophisticated smarts to existing grid built in previous decades when nobody could imagine this? And are you running into that problem in Andhra Pradesh?
In fact, we've designed it with that as the starting point. Because there's a lot of very smart technologies in the US and other places which you just can't retrofit. It needs a big IT stack sitting in the utility. So our model is completely decentralised. It layers across that existing infrastructure and it looks to improve the performance from where it's at. Over time, you can make more effective investment decisions once you've got the real-time information.
I don't think I fully understood the customer value proposition, the end customer, because the grid outages you spoke about are typically even before the transformer, so you may not be able to really control those, right? So can you just explain that part a little bit more?
Well, I think the reality is that the grid outages are caused by a lot of things, but one of the big drivers is supply-demand imbalance. There's also economic rationing. There's a whole mix of things that are actually driving that, and a big portion of them we can actually control sub of the transformer. The other thing is obviously with more distributed renewables, then you've got the opportunity to start to manage as an autonomous grid locally. Thank you.
Great, thank you, Wayne. Okay, that was fun. Yes. So now what we're going to do is maybe go one by one, and then each of the jury members can give their thoughts. And I'm sorry, Arpit, you missed most of Bhaskar's, but maybe Anant will fill you in on what Bhaskar's big idea is. Okay, so Jesse, should we start with you?
Sure. Well, it was a pleasure to listen to all three. I don't run an incubator, and I don't have a background in project development. I come from the overall perspective of the energy system transition and what we are going to need as we attempt simultaneously to digitalize, because that is coming as an exogenous force for change, to decarbonize, which will not happen without policies, but is an existential requirement, and probably to liberalize markets if we make that policy choice. So, you can look at these projects in terms of the opportunity, the scale of the problem addressed. You can look at the achievability of the project, which certainly is very interesting to an investor. You can look at some of the challenges and hurdles that are faced, and I think we should also think about what I call the excitingness factor, the excitement factor of simply addressing something. Now, on that, on excitement first, I loved the proposition from New Leaf, because you are addressing local, renewable, and cooling. These are three of the fundamental issues that we are trying to address. Really the question I didn't hear an answer to yet, and maybe it's simply too early stage, is what's the return on the investment? How many years is this going to take to pay off for a relatively modest scale fruit farmer, vegetable farmer? And clearly there's a time period which is going to make that financeable, and there's a time period which would probably push beyond where those kind of customers would be able to raise the finance. Village energy. Personally, I adore anything that is in the super sophisticated smartness space, where we are trying to face the fact that clean energy is going to be much, much more complicated than the relatively simple historic energy system that we have with fossil fuels and dispatch and centralized generation. In other words, anything that's going to address the fact that we will have heterogeneous production, storage, and load, and that we will need to optimize across this in real time on a basis that cannot be run by human beings, that has to be run by algorithms. But there is an enormous caveat for me always when I think about this, which is that from an ICT perspective, in principle, the number of transactions that you can conduct is infinite. Your AI can do any number of calculations it wishes to with any number of potential transactions between those different elements. The grid is a physical entity with it's copper. It has principles of integrity that cannot be breached. So all of these possibilities of applying AI to grid operations require you to have decision gates. And at those decision gates, the grid operating principle has to decide which transaction can be handled and transferred through the grid, and which transaction, in fact, will challenge the integrity of the grid and therefore must get a no. So where are those decision gates? In Europe, we're beginning to discuss this as what we call the loop control problem. And there's a lot of space there where you start to need to have regulators and other actors come in before I think you can deliver this on a large scale. Coming back to the electric vehicles, just to round up, the fascinating problem of data silos. How do we move beyond the data silos that we will see as new innovative market products develop? I asked about who's the first client because I imagine the real client ultimately is the car companies as they start to stop thinking in terms of selling to individuals and they start thinking in terms of selling to fleets. And that's part of the transition we were discussing in the previous session about how people use vehicles for mobility.
Super. Okay, Anant. So what we'll do is each of the four of you can give your comments exactly the way that Jesse had, and then we'll discuss on very specific, we'll follow a framework and then work through for each of the three, we'll do a little grading. Okay, go.
Yeah, I tried to wear the investor hat while I listened to the presentations and to, very quickly see, what are the plus points which would make me as an investor be attracted to these companies, and what would be maybe the challenges which would kind of deter me a little bit. So maybe we'll start. So when I look at Minergy and Bhaskar's presentation, it seems straight out the most easily scalable model, and scale is something that any investor gets very excited about, because once you build the platform and you start bringing in more, then for the same technology you can just scale drastically. That's the beauty of a platform and the software approach. So that's clearly a huge advantage, and which will make it attractive to investors. I think the challenge would really be the domain and the demand creation bit, because this is so new that, again, I was asking, the question that, why would somebody come to this platform when they probably have access to some kind of a platform already from their OEMs? And, I think that's that whole changing, people or bringing people onto the platform, especially in the very nascent stages of this industry. I think that's a challenge, and that's something which an investor would probably think about, before they take the plunge, right? Moving on to New Leaf, I think very clearly the need for cooling, and as also the need for disposing of farm waste in a sustainable manner. These two are very, very clear drivers which are pushing this. So clearly the product fits beautifully into that slot. I guess and that's a big positive. So there's not much convincing people needed. You can the product kind of sells itself, but not the pricing. I think that's where the challenge comes, that trying to fit the demand with the kind of price that these kind of products cost. I know Anurag didn't really discuss the pricing, but I know in this category that the pricing is typically, the capital costs are high, and that's a big deterrent. Secondly, the behavioral change. So today, the whole idea of a farm gate cold storage, has not really taken off, because farmers' behavior is very different. They tend to dispose of their crop as soon as it's harvested, because ready cash is the need of the hour. And this whole idea of preserving and selling for a better price, I think that involves behavior change. So whenever there is, an investor sees the need for behavior change to happen before the product can sell, that is a deterrent. And the company needs to convince of how they've started off that trend and how they've seen the behavior change happen in order to convince an investor. Moving on to Village Energy, I think the product seems to address a huge addressable market, because obviously these kind of the whole power outage, power theft, power optimization, this is there in every village transformer right across, and the number is huge. So clearly that is there. But the flip side, again, the primary customer is a discom, and that adds a whole level of complication. But more than that, the delay in decision making, the slowness, the staying power, the financial stamina to wait for long payment cycles, long decision cycles. Typically we see a startup has a lot of difficulty navigating that, and that's really a big player's game in today's economy. So that again would be a slight deterrent. Yeah, I'll stop there and maybe we'll come back.
Arpit?
Sure. Thank you. Hi. I joined My Energy late, but whatever limited I understood from what Anurag spoke, and Anand just briefed me. See, software is very useful, and I'm addressing this to Bhaskar. Software is very useful, however, it has to reflect the value in terms of time and money saved. I'm not sure that value has been proven yet to the customer. Also, I didn't see any, at least from whatever limit I know, I don't know how is electric vehicles different from IC engine vehicles as well. So if you're doing fleet management, you could also install small devices inside a IC engine, and most devices are connected already, and start doing it for larger fleets rather than waiting for electric revolution to happen, at least in countries like India or even Southeast Asia. Elsewhere in the world, fleets is available, and you can do some big value add, because fleet management per se has been around for a while in India, although for IC engine, and you will eventually have to compete with those guys. So start now and try to replace them with a new technology that you're building. Maybe at some later point of time, B2B2C is something you could explore, and start making this available to consumers. So New Leaf, Anurag. So innovative products and hardware products have this challenge that whatever you are selling is dependent on the cash flow of the person putting the money. I don't know what it costs, but I'm guessing it will cost, let's say, 5 lakh rupees to install one unit, or 10 lakh rupees. 20 lakh rupees, right? So the challenge is that most farmers, I don't know whether they have 20 lakh rupees to spare. So access to debt is going to be a big challenge. My suggestion is that because access to debt by a single farmer is going to be a challenge, farmer-producer cooperatives could be the way to go, where they can start experimenting and eventually the bigger farmers will start installing it themselves. Because without debt, you will not be able to scale. And it is not your problem that product is 20 lakh rupees, it is very valuable, but it just becomes very hard. So in my experience, it has been a tough time for people to sell products which are expensive as an upfront capex. And eventually they want to, values realized recurring over many years. What you're building is very useful. Of course, it cleans up farm residue and creates cold energy. But a lot of such people have struggled. In my experience, people have tried doing biogas, solar energy, off-grid, on-grid. They have struggled because the cost of installation is too high. And please watch out for that in a business model itself. So, by the way, I've met Wayne a couple of times already. So I know a lot more about what he's doing. So for everyone else who's here, what Wayne did not explain very well is that they have been able to convince the utility to put the device in each of the meters at their cost, which is I think some 1,200 rupees or something. But for, let's say, it's not a small amount, but for millions of houses that utility goes into, it's a lot of money. And at least the economics that they showed me when I met them last was outstanding. Because what they're saying is basically, I have it's like a one-size solution for all of India's power problems. They're saying, okay, here is a solution which will give you more cash flow, reduce your cost, increase your revenue, at the same time customer is happy. So it is definitely too good to be true. I told him so. And we are still exploring as an investment opportunity. But what they are building, at least in the small test field, is very, very exciting. I think if it scales up, it could really change the power scene in India. Although, as you can imagine, they are too small and likely they will have too many problems scaling up. But all the best to them. Also, they're Australian, so they don't know what they're up against. So yeah, that's my comment. Thank you.
Thank you, Arpit.
Thanks. So I think all three ideas are very interesting, and while I would try to put on the investor hat, the legal hat kept coming in, and I'll just talk about a couple of the risks that I see. I completely agree with, I'll start first with the village energy, and the main risk I see is resistance from a pure grid security perspective. And we are in a stage in the country where we're evolving our grid security regulations. They are not yet there, and it will take a whole lot of convincing. Maybe AP has been a progressive state, and hence you received good feedback from the discoms there, but the more you interact with other state discoms who are not on those same lines, there will be a whole lot of resistance that I see coming from purely grid security. Second, like Arpit mentioned, if you're able to show them, the benefits show the discom the benefit it is going to get, you may find acceptance, but you definitely will have to deal with how to, sort of align your systems to not violate any existing or potential grid security issues. So but very exciting and innovative idea. Moving on to New Leaf. Sorry, I misunderstood your thing. I thought it was the biomass generating power which was then doing the cooling, so now I understand it is direct cooling from the energy source. My issue there and the risk that I see is of sort of the sustainability of that asset, because typically, and little that I know about agriculture, the planning for agriculture is done well in advance, right? So if you're assuring a farmer that his products are going to be put in cold storage, and he's going to be able to reap the benefits, and that is the sort of thesis on which he's investing. What if this asset is not as stable as you claim it to be? For a large cooperative, they may find ways and means to sort of still resurface, but for a sole farmer, it might just break his back. So and that might be the end of that story. So in terms of, you didn't probably mention it, but if you had some thoughts on how you're assuring the farmer of the continued quality and availability of this asset, that would be of help. Coming to my energy, I think biggest concern I see is of one, fleet operators, yes, in urban areas, very true, but in rural areas, you haven't yet seen big fleet operators operating in the rural areas, and we are 80% rural. So scalability is what I would worry about in terms of the business proposition. But for urban areas, clearly, I think it's a great idea, and so long as the data security issues that you are able to navigate and you're able to give assurance to both the the fleet operator, the OEM, and the EV provider, I think that's can be fixed. Yeah.
Great, thank you. So actually, I think a lot of the comments that were made by the members of the jury address the 4 pillars on which I would think that these pitches should be evaluated, and so one was, of course, feasibility, returns, what is the turnaround time for you to recoup your investment, what returns would you make, etc. But also then scalability, impact, because if especially in the context of what we're talking about is that you want to support businesses that support the transition or accelerate it, how impactful will this intervention be? And then the 4th one is, does it address a new market or open a new market or create a new market, right? So those were the 4. So maybe we'll go one by one, and that you already sort of know how you feel about it. So on feasibility, and then maybe you just sort of say a word or a line each for the 3 businesses, and then we'll just do it like that. And then we can do all 4, yeah? So should we just follow the same order?
Feasibility, my energy. One question that I've heard coming up from people who work more and more in the EV space, so don't talk about EVs, talk about automated, connected, electric and shared vehicles, ACEs, is the extent to which all the sophisticated sharing, which is in a sense where you're going with the information upload that you're talking about for the platform, also has a computational load for the battery. So I would put that in the feasibility questions. To New Leaf, this seems to me in principle very simple. If you can get the customer to take the risk of the commitment, so perhaps you're talking in practice about larger farms doing it for some share of their crop, which is more financeable. It allows them to bet on the immediate market for the lemons, but also on the long-term market, compare those results. And I think over time, I don't know very much about the economics of agriculture, but what starts to happen when everybody's cooling their lemons and everybody's chasing the long-term market from a particular region into whatever is the main customer base. And Village Energy, Discoms, I fully buy into the comments that the challenge here is to persuade the Discom on a timescale that is really, really valuable. But if I think I made my point about grid integrity earlier a little less clearly than I could have. You made an analogy to Uber. Uber's great, but it doesn't control the roads, it doesn't control the traffic lights. Therefore, it does nothing about traffic jams. That's the problem that you face.
So Anand, maybe do you want to do like a relative ranking on feasibility?
You're really putting me on the spot. Okay. Sorry. Okay. 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 So okay, I guess feasibility-wise, probably. Well, it's really difficult to do relative, but I'll try. And you know, this is again off the cuff, and don't take it, you know, at face value, right? No offense, really, right? So I think I would probably, in terms, and again, one disclosure or disclaimer, I work pretty closely with New Leaf and Anurag, so I know their business model pretty well. So obviously that feasibility, we do see from the numbers that it is a feasible model, and there is, and it's, you know, they've been in the market now quite long now, so there is a track record to show that it can be feasible. I think it's really that high capital cost issue which we spoke about, and there are workarounds for that in terms of arranging financing, moving to a rental model. So I think if those, not so much on the product but on the business model, if that is perfected, then I think it's definitely a feasible product. And this I say just because it's been longer in the market and therefore more mature in terms of the thinking, right? In India, that is. Second, I would say probably, yeah, Village Energy, I do see a feasible product and high value add product, but my reservation about selling to the BESCOMs and, you know, and the consequent issues of, you know, payments, tendering systems, and all that. I do see that as the challenge. And I think Minergy I put probably at the last, simply because it's a timing issue in my opinion. I think it's a very feasible product if parallelly this whole EV and fleet management kind of need takes off, and I think it's really like we have to wait and see if that happens, and a lot of fleets go electric. Of course it's applicable for other kinds of fleets as well, but since the primary target is EV fleet, it really depends on how that curve goes upward. Okay.
Yeah. Okay, so maybe now we do scalability. So do
Sure.
you want to say on scalability of the three?
So, because you are a pure software company, Bhaskar, scalability will be smaller in terms of the total number of total amount of revenue you can make by selling your software, as compared to what a Village can make, or as compared to what a New Leaf can make, because they're selling hardware, much bigger devices, costlier, and the market size, the multiplier effect is too large from the perspective of whether it can scale or not within India or not, is the question. As compared to that, talk about New Leaf, my sense is that there is a clear business model. I don't understand the full business model completely. Anand says it makes sense. So as long as one unit, if there is a profitability possible, the scalability seems like the highest. Also, it has to be looked at from the perspective of whether there is an acute need that it's solving. And because I think there is an acute need that they're solving, the scalability looks the highest to me.
But I'm wondering on scalability, just if I can ask a clarificatory question, and I get no time limits. So, but shouldn't it be by market share? So if, say, for instance, Minergy offers this for fleet, and every single fleet operator uses it, and there's they're happy with it, and there's no competition, etc. Is that, as an investor, not something that, say, you have, even though there's many more agriculture or like people doing horticulture farming, that
these numbers are very simple to do. I can just do rough back of the envelope calculation. There are about 2 million rides that people take on an average, less than 2 million, 1.5 odd million rides across all aggregators, including Ola and Uber in India. I don't think anyone will be willing to pay more than 1 rupee per ride. So this means that you can make 10 lakh rupees or 15 lakh rupees per day, which is multiplied by 365 is about 36 crores, right? Or something like that. So that is the number that you're talking about scalability. Scalability is always in terms of market size, revenue, or whatever, right? As far as New Leaf is concerned, for example, each unit is 20 lakh rupees. And even if the recovery period is 4 years or 5 years, per year recovery period is they can at least make 4 lakh to 5 lakh rupees per year recovery. And the number of units that they can technically or theoretically install is in millions. So millions multiplied by lakhs is a humongous amount of money, right?
Okay.
So therefore, so theoretically it is much more scalable. Although the key challenge in India has always been that any new hardware that we build is unable to scale because of a variety of challenge, and VC funding is one of them, right? So that will always remain a cap, and which is why I haven't really seen an Indian innovator building something which is fundamentally innovative and being able to scale it to, let's say, hundreds of thousands of units. I mean, small agriculture implements here and there, notwithstanding, innovative stuff is hard. So that remains a cap. The third, in terms of Village Energy, theoretically, it is very, very large, because he's talking about $1 per connection per month kind of revenue that they can make. Just imagine, it's about hundreds of millions of connections per month. So it is hundreds of millions of dollars of revenue theoretically per month. And in a year, billions of dollars just in India. But that's theoretical. How far we will reach is still a question, right? So yeah, that's so that these numbers are easy to do. We do this all the time in our minds as we value businesses.
Okay, so do you want to do also scalability, and then everybody can do impact in new markets, and then we can.
In fact, so on scalability, I actually agree with what Arpit is saying, that I find from a scalability perspective, a theoretical scalability perspective, Village Energy to be the easiest in terms of scaling up. New Leaf, I would put New Leaf and Minergy on a similar sort of level, and not one or the other, because New Leaf has a challenge of affordability, and Minergy has a challenge of base. So you have a larger consumer base, he has a smaller consumer base, and hence both will have their own issue with scalability.
Okay, so and then we'll just do it in the reverse order. So let's do impact and new market. So this is keeping in mind sort of the transition, what impact can it have on that, and does it address a gap that hasn't otherwise been filled?
Absolutely. In fact, of all the three presentations, the one presentation I really liked the most was Village Energy, because it is trying to solve a problem that doesn't have many other solutions. So we have all over the years talked about DISCOM health and how we can improve AT&C efficiency, recovery, all of that. And this seems to be like a solution that, if implemented well, can solve that very big problem which affects various other kinds of stakeholders, not just the consumer alone. So if it is implementable and it can reach scale, I think in terms of impact, that probably in my mind would be the most impactful.
Okay, Arpit, on impact and addressing gaps and opening new markets.
So Bhaskar addresses an existing market. I think fleet management as a software concept exists. So therefore, no new market created in so much, as far as I know. I'm sure there is something happening which I don't know about. In terms of impact, it doesn't. So when I look at impact, I think of impact on an average Indian. Not much impact. I mean, even if there are no fleet management software and people are doing everything manually, they'll still manage somehow. So the fleet managers are not going to change. Average Indian lives is not going to impact it dramatically. If our DISCOMs become better, there's an immense impact possible, but average Indian will not realize it, because they think about it, you are not going to know whether it, you are definitely going to benefit from getting better power or 24/7 power. However, you are not going to realize the benefit of village power, village energy on an everyday basis. However, for the people who use a new leaf solution, especially the farmers, and there are hundreds of millions, tens of crores of farmers in India, for them it is life-changing in terms of its impact. So I think it may not be creating a new market because such things already exist in the broad category of cold storage, but it is impacting in a dramatically new way all their lives. So between impact and creating new markets, I'll give impact to New Leaf and new market to Village Energy.
Okay, Anand?
Yeah, I mean, completely agree. I think impact, there's no question in my mind that New Leaf would have the highest impact, not just on the farmers who use it, but also remember that they're using farm waste to fuel the whole thing. So we all know the problems in Delhi from burning, farm waste and stubble, and a lot of that can be avoided. So actually the impact trickles down to each and every one of us who has to breathe that, pollution which has been otherwise generated. In terms of creating new markets, probably Village Energy would get my vote. And a close second is my energy, because but I think Village Energy really will open up a much larger new market from what I hear. I mean, New Leaf, yes, new way of addressing the same market, but the cooling cold storage market is not a new one. Yes, farm gate cold storage might be new, but cold storage itself is not exactly a new market. So I would put that as a third.
I'm afraid I'm going to agree with the previous. For impact, clearly New Leaf. This is addressing three of the major sustainability issues: waste, food, and thermal energy loads. I work on the power system. Frankly, I work on the power system because the thermal loads are too scary to work on. If you think about the demands for heat, the demands for cool in an expanding population in the world which expects, frankly, more comfortable conditions, the food problems are even more scary, and the waste problems are probably more scary than that. So anything in that space, it's a winner for impact. And then, yes, Village Energy for the new market, really because it's about AI. What artificial intelligence can bring us that we can't do before we cross that threshold into allowing machine learning to discover things that we actually have not yet seen in terms of potential for efficiencies, patterns of use, things that we can control that so far we haven't thought about linking to one another. So anything in the AI space is really about increasing our understanding of the complexity of our world, our visibility on that, and therefore our ability to look for new solutions that cross-sectorally deliver.
Great, thank you. Can I have my slide? Okay, great. It's somewhere where I can't see it. So I need to stand on this scary thing that I have only made other people stand on over the last 2 days, but I finally have to stand on it. Okay, you can't really see it very well, even though I thought it would be larger. But with support from the Shakti Sustainable Energy Foundation, we've been working in the last few months on thinking about what kind of structure can we design to work with the existing ecosystem players, which is accelerators, incubators, as well as other kinds of funds, whether it's impact funds or even early stage philanthropy or early stage pre-seed kind of funds, but to support innovation through the second value of debt, so after technical prototype and before market scale. And the idea, and so a lot of our focus was not on what kinds of technology, which is why this was really interesting for me, but it's more on what kind of financial and regulatory structure would allow you to do this. So the idea for us is that how do you, and what we are proposing to this, to all of you here today, is to have an alternate investment fund under the special category for social venture funds, which would be capitalized largely, at least at the start, with philanthropic money, but would follow market principles to provide predominantly equity, but also some debt to some of these. But also the idea is to while optimizing for the 4 things that we just discussed now, those categories or those lenses and metrics of assessment, but also to identify some target markets. But that isn't, again, for the fund to decide, because the fund in and of itself isn't qualified to do so. So it would work actually with what is called a technical assessment unit, which would be separate from the financial decision-making unit, that would identify in advance what are the different areas along with the board that they want to focus on, and then work with existing accelerators and incubators that can then bring this kind of pipeline of projects or potential recipients of capital to this to the fund, right? And so that's the design that we have. This is a design pre-feasibility study. There are copies of it available downstairs, and we'd really like to get feedback on this from all of you, as well as also be interested to see if something like this would fill a gap that you've noticed, and how can we actually work from taking it as from just this design phase to actually an operational phase. So with that, I thank you very much for your time.